Hey guys, welcome to this quick video about imbalance in market. I know that some of you asked me in our Discord channel about this concept, so I just want to make a quick video about these topics because it's one of the really important parts of my methodology. So thank you, and let's start. I have 5 points that I want to talk about today. The first point would be what is and what means an imbalance in the market. The second point will be how to discover where we can find imbalance in the market. Three, how to set up the imbalance indicator in TradingView. That will help a lot to check imbalance. The fourth point will be how to mark zones, supply or demand zones with imbalance generated. And the number five would be a little of back testing that we are gonna do with this 4 hour chart for Bitcoin. Okay, so what is an imbalance? A lot of new students, new um people who joined to my Discord channel, they ask me a lot about imbalance. So basically, we have the market. Okay, this is the market, right? This is a candlestick chart, and usually we have a lot. You know that we have buyers and sellers all the time, every second, every minute, every hour, every day. And there's a lot of people who are kind to buy any specific indicator, right? Any specific uh, coin, any specific active in different price. So, for example, will be buyers obviously at these levels, and sellers as well. So the market is really efficient usually with buyers and sellers. So all the spikes that we have in different candlestick basically is the balance between buyers and sellers. So we have buyers and sellers here, here and here, in everywhere. So all the time we have buyers and sellers. All the time we have people who are kind to buy at this specific moment, at this specific price, and there's sellers that are inter- interested to sell at this time, at this price. So what we're gonna do is to identify where is the best position, where is the best situation to go to the market. Okay, so that's why we will try to look for imbalance. So what means exactly an imbalance is basically when the power of buyers or the power of sellers is significantly more compared to the strength of sellers or buyers in a specific moment. So basically, remember that if just give me 1 second. If I have this candlestick, okay, it doesn't matter if it's red or green. Let's say that it's green, okay, in this for this example. So basically, this candlestick is saying to me that the price start at this level, then sellers push a little bit the price here at this level, then buyers get control of the price and move the price to this level, and then it was like a kind of balance, and sellers come back to push the price and finish this candlestick at this level. So that's how we have a candlestick. Okay, that's the information that one candlestick can give us. That's a really important information. So that's the usual situation on the market. But what happened about the imbalance? So basically, when we have, let's say, something like this, so we have this situation where buyers and sellers are pushing fighting with everyone looking for best positions, but the price is in a really equilibrium, right? And in efficient market. And then we have this candlestick, this strong candlestick, and then we have another one who is also a green candlestick. So what happened on this situation? This means that buyers have control of the market significantly more than sellers. That's an imbalance in the market. We also can see this situation, for example, here. So price is really efficient, buyers and sellers, buyers push a little bit more here, then sellers, and we have a big candlestick then. So here, in this moment, sellers have more control of the price, more control into the market for against buyers, right? So one of the things that really matters is to understand that market usually is really efficient between buyers and sellers, but there are some moments that market creates imbalance, creates an explosion of the price for any reason, and that's the point that we will keep an eye on. Okay, so basically that's an imbalance, and that's what means. The second point would be how to discover an imbalance in the market. Basically, one of the biggest confirmation that I like to see an explosion. Okay, I want to see an explosion of the price. So it will be something like this when we have like a big candles, or one, two, three candles to one side. Um, Big candles give us a lot of information about it. Uh, so we have all the time these type of situations into the market. So that's another, for example, this will be imbalance as well in terms of power of sellers that are pushing the price going down, but really efficient, right? So buyers and sellers and pushing the price with a little bit of control of sellers, right? But this is you can just compare the information that the candlestick give us. So for example, we have let's make this. So starting this candle until this candle until this one, here we have 3 days and 4 hours that the price move from here to here on this range, right? So it will be 3 days and 4 hours moving between 41.5 and 37.2. And look what happened next. All this range was killed basically from this candle until this one, right? So that will be just in a day. So price took 3 days and 4 hours to move all this, and then one day just to kill all this movement. So give give me information. That is really important for me, that buyers are in control in this section, in this area. Okay, so that's really important. How I can set up the imbalance indicator in TradingView? Because here, okay, here we have big candlestick. But how can I recognize little imbalance that also can help me? Maybe here we have, maybe here, maybe here. So one of the indicators that are really helpful, it's called imbalance. Here on the top side on TradingView chart, right? You have the indicators. This is in Spanish, but it's the same thing. So look for imbalance indicator made for. There's a lot of imbalance indicator, but I use this one make for this user. Okay, so just click on imbalance, and you will see the indicator here. Okay, imbalance. You can set up and you can use the color, whatever color you want to use. Um, in this case, I'm using a green and red typical classic chart, so I will use the blue color to show the imbalance. So as you can see, the blue look give us information about the imbalance, and I will show you straight away. So basically, we have the price here. Okay, I will explain this one. Okay, so then I have this first candle, then a second one on this uptrend move, and then a big candlestick. How the indicator recognize the imbalance? Basically, because the imbalance is generated when we have this high highest price at this time with the lowest price on uh, on the next candle, this one. Okay, so we are basically analyzing the imbalance for this candlestick. Okay, I will just put it here. So we are analyzing this candle. So we have this point as the highest point of this candle with the lowest price of this big candlestick. So basically, what happened in the market that we were in control, really efficient, and then price go up with huge strength. What happened here? So basically, here there is no power of sellers, and buyers are pushing the price up. So what does it mean? That means that there is a few people who is taking sales on this area, and there's a lot of people buying. Okay, remember that uh, this is that's one thing, and the other one is that sellers are taking profits. Sellers are taking profits on these levels, so when they are out of the market, price also explodes. So there are two really important factors to analyze on this. Okay, so it's not just that everyone is buying; it's also that there are sellers that are taking profits, are getting out of the market. Okay, so basically that area, and I will use something just to will be more clear for you guys, is that here we have a zone like a black hole that is not efficient on the market, and we have an imbalance in the market. There's a lot of buyers, few sellers, and sellers are taking profit as well on this level, so they are getting out of the market and price go up. Okay, that's basically how you analyze the imbalance, and the indicator help us a lot to identify that zone. So basically we have this one, this one, this one. So I will just mark everything with imbalance. That one, that one, just to mark zones. Okay, that one, that one. Here they're really. So we can just mark possible zones that they have imbalance generated. Okay, so now the important thing is to uh, you need you need to unite your factors, your trading plan, because not all the imbalance are tradable. Okay, so that's one thing that we are gonna do a little back testing at this time. So one of the things that I like to do is to recognize which imbalance are working and which is the trend. Okay, so just analyzing this, you can completely say that we are in uptrend, right? So basically, let's take give me just 1 second. So basically, we'll just wait. So check how the price go. In this case, create an imbalance, test it quickly, start to move, price efficient, buyers and sellers, buyers and sellers, buyers and sellers. Price go down to this imbalance zone and explode again. Price efficient. Sellers are taking control. This zone is being respected, but price is going deeper and deeper and deeper, looking for better price. So if you think like an investor, you will buy cheap and you want cheaper, and you are going to sell uh, with a higher cost, right? A higher price. So that's why here price did not respect this imbalance, and price went to this level, to this imbalance, and look how beautiful the price react and go up again. One of the confirmations that I like to do is this. So you need to use your trend lines. Check, for example, which area was the responsible to break this level here. I will just erase this thing. We're gonna do a little bit of back testing, okay? Which was the which imbalance was the responsible to break this level? So we have this one, we have this one that is smaller, and we also have this one, the origin. So have this one, right? So depending on your trading plan, you can decide to buy here or here or here or here. In terms of possibilities, you will have better odds on the origin of the movement always. But that doesn't mean that the price cannot react before. Okay, so price perfectly can just here react and continue going up. Okay, in this specific case, price went to the origin of the movement. Look there, two times. Two times price went to this origin of the movement. So why I usually don't use this first zone, because price couldn't generate new levels. So basically this was like a kind of resistance, right? So this first area was completely invalid and it's more risky. This area works. This area works first here, but then price react, couldn't break this level and continue to go deeper. So this second area was invalid as well. Depending on your stop loss, this second area works better, but I don't like this type of movements. Okay, so we will just focus on the first one and just want to make sure how the price react really well on these points. But we need to consider that the price tested this zone and react really well. So when we have a reaction, an explosion, accumulation outside the zone, there is more chances that price will go back to react and continue the trend. Why? Because probably this is a really important zone for institutions, for big whales, for people who are have a lot of Bitcoin. So basically this level, it's around 30, 37.3 and 36.5. This area is important for buyers. So if I have, like, let's say 1,000 USD in total, here I will just buy, let's say 700. Okay, 700. Then at this point, say 250. So what means 700? That probably I did buy market orders, let's say $300, and I will just buy again if when price come back with $400 buy limit. So basically, if I push the price to go up buying, I will not put all the money there. That's what big institutions do. That's why big investors do all the time. They don't invest like us, putting all the money in one price. They create different scales. So they buy here, they buy here, they buy here, they buy everywhere. But there's some zones better than other ones. So basically this area was perfect to buy. Then let's see which zone was responsible to break this level. I would say this one, right? Price is still very outside the zone, but it's a really interesting zone. The price was really efficient. Let's erase this. So what I don't like, for example, here you have an imbalance, yes, of course, but price didn't create an explosion in this zone. Look, it was okay, one imbalance, but it's really small, and price come back really deeper. So this zone is could work, yes, but it's really risky. Okay, really risky. And you can say, yeah, Fernando, but the zone was respected and price go up. Yes, I mean, of course, price can do whatever it wants. Uh, then another confirmation. Okay, which zone was or which imbalance was responsible to break this level, like this point, this higher, to create a new higher high? This one. Here we have the imbalance. And look, what a coincidence. We have an explosion, then price really efficient, accumulation, then price come back really efficient, test the zone and continue to go up, and we have another higher high currently on Bitcoin, close to 48K, but price is fighting there. Now we have an imbalance for sellers. Look, it's kind of small actually. So we will continue buying. We have important zones to wait, but let's see what is going on the next few hours. Okay, so guys, this was a really quick video. I hope that you can understand most of the concept. You are on my Discord channel. Give me a question, text me. I'm happy to help. And I'm developing a supply and demand course with videos. Will be with a really good price because I like to teach. I like to learn constantly with you guys. So we will continue with the analysis every single day on the Discord channel. So thank you and see you on the next video.